The number one mistake new investors make is waiting. They think they need more money or they need more knowledge. But the truth is, starting early, even with a little, can make a big difference in your investing journey. It's the single biggest advantage in investing. I'm going to show you a long term portfolio that I built and the companies that I believe are very good for many years to come. But before I get there, let's discuss something simple that I think every investor needs to understand about time. Let's say somebody started investing 30 years ago and invested in an S&P 500 ETF averaging about 8% annual return, and they were putting $200 per month for the last 30 years. Today they will have $270,000 in that portfolio. On the other hand, let's say the same person waited 10 years before they started putting that $200 per month. They would have $110,000 only. The result? They'll have $160,000 less in that portfolio, averaging the same return, but they'll have less than half. 270,000 versus 110,000. You decide. Now that is the power of time. Not timing the market, but time in the market. So yes, the biggest hack in investing is not a secret stock pick. It is starting early and sticking with it. But here's the thing, once you understand this, it's not just about time. It's also about what you actually invest in. That is why I built a long-term portfolio to ride the ups and the downs and grow over time. And now I'll walk you through the top 5 stocks that I have in my long-term portfolio and the reasoning behind them. Robinhood has become the go-to for new investors and traders with over 27 million members and $280 billion under management. They're built on the idea of making trading simple and free. Their business model is very simplified and unique. They're not making money the normal traditional brokerage route. Instead, their revenue comes from gold membership, order flow, and interest income. The turning point for Robinhood happened in 2024 when they became profitable. Now, that's a milestone that changes the narrative from growth at all cost to sustainability. Robinhood is expanding beyond trading. It's interesting, they're evolving with a great speed. They're launching their retirement accounts, credit cards, crypto wallet, basically moving towards a financial super app. The second company is none other than the AI backbone, NVIDIA. NVIDIA is the backbone of AI infrastructure and the revolution itself. Their chips are the foundation of GPTs, self-driving cars, and even robotics. Their business segment is 90% of revenues coming from AI data centers and 10% coming from GPUs. But let's put it this way, GPUs are still part of their business, but AI is the rocket fuel for them. And it's a cash cow because their revenues, their earnings per shares, and the fundamentals are just amazing. NVIDIA wants to be the operating system for robotics from factory operations to humanoid robots. And the future outlook is pretty clear. The next wave of AI is not just about software, it is about hardware and software combined. And that's NVIDIA's focus for the next decade. Third company is IBIT. Now, it's a Bitcoin ETF backed by BlackRock. And when the world's largest asset manager like BlackRock steps into crypto, it means crypto is here to stay. It's not going anywhere. Now, let's talk about credibility. IBIT started back in 2024 and it has about $6 billion under management, up about 140% since inception. IBIT's performance mimics the Bitcoin's price movement. Now, IBIT is just a simple and easy way for investors to participate in cryptocurrency without having to go and open up a crypto trading account. Cryptocurrency is positioned and expected to continue growing, and you can see institutions are jumping on board. And when that starts happening, you know that the asset is here to stay. Next company is Tesla. Now, Tesla's goal is not just to be an electric company. It is becoming AI and robotics company, which also sells electric cars. The core business model today is electric vehicle, but it is growing its energy business, solar, Powerwall, Megapack, creating an ecosystem around renewable energy. The real differentiator is data. Millions of cars on the road, feeding Tesla's AI. That's what makes their self-driving and autopilot very unique. And beyond cars, Tesla is pushing into robotics with Optimus humanoid robot, a potential game changer for factories and labor markets. Growth in regard to the vehicles, Tesla started self-driving taxis in Austin, and if they scale that globally, that's just going to open another big market for them. So Tesla's building hardware, they're building software, and that's their biggest edge and allows them to move faster than their competitors. And the last company is Uber. Uber is not just a ride company anymore. Yes, a part of their business is rides, but it is quietly becoming global logistics and mobility powered by AI and robots. And today they're not just about rides, they're about Uber Eats, Uber Freight, and it is a meaningful part of their business now, and it is making them more resilient than a few years ago. A company with multiple different revenue segments are usually stronger. Uber is also taking advantage of the robotic innovation and they've started experimenting the robotic deliveries. So the long-term story here is clear. They're going to scale up their ride business. They're going to have more robotic taxis on the road, freight automation, and last-minute delivery robotics. And if successful, Uber is going to become the backbone of transportation across the globe. Now you have a copy of part of my portfolio, and I encourage you all to do some research on the stocks. But the point here is simple: start early, stay consistent, and focus on stocks that will grow over a decade, not just weeks. And remember that chart that I showed you earlier? That was not to scare you, but it was a wake up call. So if you're watching this right now, you're already ahead of others.